Hello everyone, thank you for tuning in today. I have a special show. Today is Valentine's Day 2017 and we want to talk to you guys about Valentine's Day and mortgages and how they correlate, or maybe they don't. But first I want to keep this light, and I want to speak to you guys a little bit about how unprepared I actually am as a human being and a husband. I actually have not even gone out and got my Valentine's present yet. Unlike my colleague here, Sam Guy, he has gotten his present way ahead of time. Can you tell us how prepared you are this year?
I don't take a risk. I just pre-schedule my deliveries. Not just for Valentine's Day, for birthdays and the whole 9 yards. I got her flowers, I got her a little teddy bear, and some chocolates.
See, that's the kind of realtor you want on your team. You want somebody that's prepared, not like me, someone who leaves everything for last minute.
We'll buy you flowers too.
So if you guys are watching this out there and you haven't gotten your wife or your mother or your girlfriend anything yet, it's not too late. Go out there and get something. Hopefully this video gets out there before the end of the day. But we also wanted to tell you guys that just sometimes, because it's not Valentine's Day, it doesn't mean we don't appreciate you guys. We always do. It doesn't have to be Valentine's Day for it to be a special day for our loved ones. So with that being said, let's talk about mortgages and the questions that people always have. First-time home buyers, or maybe even home buyers in general, have questions. There's people out there who are very smart, but they have never gotten a financial education when it comes to mortgages. So Sam is going to ask me some of the more popular questions that we get all the time, and I'll try to answer them to the best of my knowledge.
And these questions are asked by everyone. You have people which can be really educated, really smart in real estate itself. Sometimes you're just not sure.
Absolutely.
And it's okay to ask questions. Some people just scared sometimes. I don't want to ask the question, how will the realtor or how will the mortgage rep feel about their clients asking these questions? But it's okay. Be comfortable, ask the questions. Asking is good. The more you know, the more educated you are, the more you can do a better decision on your purchase itself.
Absolutely. Yeah, well-informed buyer is definitely someone that's in a good position to make an intellectual purchase. So the questions are being asked, and we're going to answer them. If you guys have any further questions, leave them in the commentary, and we'll get back to you guys as soon as possible. So
the first question is the most important question, and the first question that comes to any buyer's mind is, how much money do you actually put down?
Well, that's a great question, Sam. I get asked this a lot, and the answer is that you can put down as little as 0% on a property, or you can go as high as 20%, or even more if you wanted to. But banks nowadays, they require somewhat of a down payment. Most loans do. There are some loans out there for rural locations that are USDA loans that don't require a down payment whatsoever. But that's more for your person that's going to be living out in the boondocks out there with the cows and the sheeps. But in case you're not in that kind of a market, that's not going to be an option for you most of the time. So the most popular loan that we see nowadays is the FHA loan. With the FHA loan, that is required that you put down at least 3.5%.
Okay.
But the downside of that is that you will have to pay what's called a mortgage insurance premium every month and at the time of the purchase. So that can actually get pretty costly. Right now, that has been reduced. It's still a factor. It's not as much as it used to be, but it's still a considerable amount that people would have to pay every month. There is talk about reducing it even further, but as of right now, it doesn't look like that's going to happen. So 3.5% for most FHA buyers is the minimum. Now, there are conventional loans that you can do, and the difference between FHA and conventional is that FHA is a loan that's backed by the government. It's not given by the government, but it's backed by them. So in the event that the loan goes bad, they are on the hook to repay the mortgage lender, whether that be Wells Fargo, Bank of America, Chase, whoever is the one that gave you the loan. Then with conventional loans, you can go with as little as 5% down most of the time for a single family, and it ranges all the way up to 20% down. And still, with 5% down, you are going to have mortgage insurance, and there are a couple of clever loans out there that don't have mortgage insurance with 5% down, but it's built into a higher rate. So instead of getting maybe a 3% or a 4% rate, they'll pad the rate a little bit in order to fit your mortgage insurance premium into it, so it feels like you're not paying for it, and you might even save a little bit of money that way, because the interest rate is tax deductible, but mortgage insurance is not tax deductible. So you might want to play around with those two options. So that's a really good factor for you guys to take a look at. The moment you go into 20% down is when the banks stop asking you for a mortgage insurance, because at that point the loan doesn't require it. So if you really are looking to buy a home and really not have a lot of overhead, save the extra money, borrow the money from family if you have to, but try to come down with a 20% down payment. That would be ideal. And from then on, if you're an investor, some banks may ask you for 25, 30% down. But we can do a whole nother show about investors. That's something that we could talk about at a later point. So hopefully you guys got a little, insight on what your down payment should be. What's the next question, Sam?
So a lot of people, always ask about what kind of loan, how much to put down. But the one thing everyone always forgets is the seller's concession itself. Mm-hmm. And how that works, what it is, and how does that work itself?
Okay. Well, a lot of times when I mention the word seller concession to a buyer, they're totally lost. They're like, what the hell is that? They've never heard the word. Exactly. So put it this way. Seller concession is a gift or a give back that the seller is giving the buyer for buying their home. Now, you are allowed as a seller to give a certain amount. Some loans allow you to put give up to 3% towards the purchase. Towards the closing costs, and some loans will allow you up to 6% towards the closing costs. Now, keep in mind, if you're buying a home that is $300,000 and you request 6% seller concession, that's $18,000. If you don't use all that money for the closing costs, whatever's left over goes back to the seller. So in actuality, a seller concession has to be money that's being given from the seller out of their pocket to the buyer. It should never be where the buyer is padding the purchase in order to fit in the closing costs. So initially when you make your offer, whatever it is, $300,000, $400,000, $500,000, make sure that your offer is contingent upon that seller concession, upon the seller giving you back money to help with your closing costs and your prepaid expenses. Prepaid expenses are your taxes, your insurance, your prepaid interest, and those items. So make sure that is included the moment you do it, because if you try to include it later, after the contract's already been accepted, you could throw a wrench in the whole transaction, and it's actually really frowned upon. So make sure that's included when you first make your offer. So talk to your agent about that and make sure they're knowledgeable enough to put that into the contract for you. Hopefully that answers that question.
Definitely does. So one question that I actually have myself is that, even being educated in the industry itself, you always are curious about interest rates and how they're going to pan out, right? Mm-hmm. A lot of stuff going on in the world, politically and everything, you always are curious of how interest rates are going to be, what's the forecast going to be on them. So what do you think about this year itself? How are they going to pan out?
Okay, well, interest rates are still historically low. I mean, I think you hear that being thrown around a lot, but they actually are. They've increased recently because of the Fed raising their interest rates, but I think it's just a sign of the times. The economy is improving, so the Fed is going to continue increasing rates. And with that being said, you're also going to see the mortgage interest rates, credit card interest rates, and everything go up. People are a little bit scared of that because it could mean a higher mortgage payment, but it also means that home prices could stabilize and maybe even come down, because the harder it is to qualify for a home, the more interest you're paying means that the homes they're going to have to level off, because nowadays in order to buy a home you have to qualify for that home. So if people are qualifying for less, that means the inventory is going to have to come down in price. So don't be scared about the interest rates, because it's all relevant. Right now you might have a low interest rate, but maybe homes are a little bit overinflated. In the future, if the interest rates go up, maybe you'll get a better deal on the home. So don't let that dictate your purchase. I think that a home shouldn't be looked at as the perfect time to buy a home because of the interest rate. Buy a home because you need a home, because it's the right time for you and your family, because the investment is presented to you. Buy a home because it's a necessity, and don't look at it as like I got to do it at a perfect timing so I can brag later on that I got it the lowest rate, the lowest price, the lowest this, lowest that. It's never going to happen. We can never time the market. So do I think interest rates are going to go up? Absolutely, I do. Do I think it's going to be a bad time for anyone? No, I don't. I think it's all relevant. I think a healthy economy can balance the two. So bring it on. I think right now we're averaging about like around the 4% interest rates in that area. So it's not going to last too much longer. So if you're rate driven, right now is the time for you guys to make a move. And what do you think about that?
I definitely agree. There's never a wrong time to buy a home. At the end of the day, a good investment is a good investment itself.
Absolutely.
My last and final question is the most important question. How do you know what kind of loan is best for me or just the buyer itself? How would he know or she know which loan is for them?
Absolutely. That's a good question, Sam, because some people don't know their options, and it's important that you understand what you're getting yourself into. Within the last few years, there's been an influx of foreclosed properties and bank-owned properties, short sales, and those things, homes of that nature. And people sometimes want to get, well, not sometimes, but everybody wants to walk into equity. Everybody wants a deal, right? But they come into these properties thinking that they can just go ahead and just get a standard loan and everything is going to be okay. The truth couldn't be further from that. What's going to happen is that the bank is going to deny you for your loan, not because of your credit or your income, but because of the collateral, which means that the property is not financeable. So what you would need to do is you would need to take out a special loan, a special type of financing that will allow you to make repairs on the home after you close on the transaction. So let's just say you want to buy a home that's $100,000 and you want to, it needs $50,000 worth of repairs, but you know that after the home is repaired, it's going to be worth $200,000. So what kind of loan is that, and how would you go about getting that? The key to getting that kind of loan is working with a specialized mortgage originator who has experience with those things, because there's a lot of guys out there who will tell you they do it, but then it will be lost during the transaction. You also need to partner yourself up with a good, reputable contractor, not your cousin or your uncle who does it on the weekends, because that's going to get you into a boatload of trouble. Get somebody, even though they're a little more expensive, but somebody who has some type of a resume, references you can contact, good insurance, because the last thing you want is someone getting hurt on the job and you being responsible for it. And it also makes the loan process that much easier, because if the documents that the contractor has to fill out are totally foreign to him, he can't understand how to even send the facts, then you're dealing with the wrong guy. Your loan is going to take an exorbitant amount of time in order to be processed because of the failure of your contractor. Not because he's a bad contractor, but because he doesn't have a secretary on staff, he doesn't have a back office, or he doesn't know how to turn on a computer. So make sure that you're working with a good team when you're getting that type of financing. If a renovation loan is the right loan for you. The two types of renovation loans that we mostly see right now are the FHA renovation loan, which is called the 203K. That's one of the more popular ones that you hear a lot of. And the other one is a conventional Fannie Mae backed loan that's called the home style loan, which is similar to the FHA, but requires a 5% down payment instead of a 3.5% down payment. So both options are available, and the Fannie Mae home style is even open to investors. So if there's some investors out there watching this that want more information on that, send us a message and we can give you some pointers on that. But those loans might be the ones that might be best for you if you're looking for a home that wants equity in it. But if you're let's just say you're someone else who has, you're just a regular guy, you just want a regular house and you don't want anything special, no surprises, then a conventional loan might be best for you, or FHA. You might want to talk to your mortgage originator about what factors benefit you more. And then you also have people who are self-employed. Now, self-employed people are a special group, because you don't report everything you make, and we all know you're loaded with money, but the thing is you can't show it, right? So there are loans out there for people like that. There's stated loans, which are making a comeback, but you need to verify a lot of income going in through your accounts. And there's also loans for high net worth individuals. They will take your assets and quantify your assets to make it look like it's income. So, there's options out there for people who, have special cases. But the important thing is that you have to be, you either have to bring something to the table, whether that's income, credit, assets. You have to show the bank you have something. You're able to repay these loans back. So hopefully that gave you some insight on the mortgage products that might be out there for you. I'm not a loan originator, and I'm not trying to come out as one. I just know a lot because I've been in this business for a long time. If you guys want a strong recommendation from Sam or myself, we can definitely help you with that. We know a lot of talented people who can help you with banking or anything that you would need in order to make your home buying process that much simpler. Sam, what do you think about that? These loan products can be pretty tricky, but
they can. I mean, looking at us, we're in the industry, we're professionals. I've been in the industry for over a year now, and lose them for multiple years, and we're still learning.
Yeah, absolutely.
You never stop. The industry changes, the market changes, loans themselves change. So staying up to date is the most important thing you can do.
Absolutely. I think it is. Knowledge is key, guys. So before you go out there and buy a house, educate yourselves. If you have questions, Sam and I are definitely always available to answer anything. And we hope you took a lot away from this video, and we'll be making a lot more educational stuff for you guys very soon. So don't forget, guys, Valentine's Day today. Go out there, get something really nice so you're not in the doghouse. It's kind of cold out here in Jersey, so I don't want to be left out.
Thank you for watching us. It means a lot.
Yeah, thank you, guys. Have a great one. Bye-bye.